How's it going, everyone? Today we are with my good friend Trader Kane, and we are going to have him answer a few questions for us.
I'm a bit nervous. I don't know what any of these questions are. You've kept them pretty secretive from me.
All right, so let's start out with an introduction. If you want to give us a little look back into your trading journey, maybe a year-to-year overview.
Yeah, sure. So probably got into trading about 10 years ago. Well, coming up 10 years. Um, Probably like most people, I got involved in trading through numerous adverts offering me, silly returns, the ability to own a Lamborghini and retire my parents. The reality is I probably just got scammed like most people. Um, my journey doesn't really look like, oh, I solidly did it for 10 years. I like dripped in, dripped out. Um, but I guess the main time I really started trading was like 2015, 2016. I really got involved quite heavily. And then dropped out around that 2018, 2019 mark, picked it back up, dropped it again back end of 2019, and then obviously COVID hit and I got back straight into the market. And predominantly most of my 2020 stuff was all crypto. Rode most of that up after COVID, rode that to like 60, rode it from 30 back to 60. Timed pretty much most of the market pretty well. 21 still crypto. 22 kind of took a bit of a break, and then end of 22 got rugged for $1 million when FTX went bust. So took a bit of a break back end of 21. 2022 pivoted back to forex. Like, you know what, I've actually learned to trade now. Let's pivot back to forex. Went to forex 2022. Made good money trading props. Again, props was kind of my journey to regain some of my capital. And then fast forward a couple of years, pivoted from FX to futures. And then currently the record holder for the largest payout. JCap is approaching, sorry, very fast. That is the better term.
So with that and everything that you've experienced, if you had to restart all over, how would you approach it? Would you use prop capital, personal capital?
I mean, the aim for me, right, is always you want to be trading your own money. You don't really want to be trading the prop firm money because there are a lot of rules and it's stacked against you, right? So do I think that prop firms are net good on the space? 100%. I think the ability to gain capital and gain payouts or accumulate capital, i.e. via payouts, it's never been higher. Like, this is the peak of it. It's only going to get worse from here, in my opinion. It's quite literally the peak of you can spend $3,000 to get $5 million in capital and run that up into hundreds of thousands of pounds if you're conservative about it. I think the downfall with a lot of people is that they shoot for the moon.
Yeah.
And they don't just take those baby steps to get there. And everyone I've seen that takes those baby steps just kill it. But yeah, if you're trading to not then transition into live, you're playing the prop firm game of just hitting the payouts and dipping, which is fine. There's nothing wrong with that. But you can't trade prop capital forever unless you go into that legacy brick and mortar prop world. But then again, you're just a fully fledged trader at that point because they're also going to impose certain rules on you to make you a better trader. They're going to coach you, etc. So yeah,
So to summarize, if you don't have that capital, now is the peak time to do it.
peak time to do it. Yeah,
But end goal should be to trade your own money.
yeah, 100%. Yeah.
So going back to prop firms, you touched on it a little bit there, but could you give us a little insight into your strategy and how you approached it day to day to build up that buffer and get those larger payouts?
Yeah, look, I haven't really said this before, but like the Apex thing was completely a plan, right? Accumulate those 20 accounts and then run those 20 accounts up in as short a time frame as possible to reach a good amount of money in 70, 80 days, because at the time you had to get 10 trading days plus a payout plus 6 or 7 payouts to then withdraw the lot. So my plan was always very small conservative base hits. Started off very aggressively early on, getting out of that trailing drawdown. I got out of it in 4 days. Get out of that as aggressive as I can. Be very aggressive with the market. Get in and out very fast. Grab those impulsive moves, those expansion candles that you obviously talk about a lot. And then I can pivot back to my strategy of taking those expansive winners and holding on to them and letting them, playing those 4-hour PO3s into those highs, those lows. And then once that account or that trade gets to a certain amount, I don't care about it anymore. I'm closing that trade. It could go to my target, but I just sized accordingly that if this plays out, I'm going to be in the money and my risk is controlled. I'm going to be in the money very fast, and I can just close it and be happy with that because the 20 accounts give me the scale. So that was always the plan, and it was just stay consistent, don't get greedy, don't hold for long moves. Most of my trades were 100 ticks.
So I've seen you trade behind the scenes, and I can say it's quite a bit of a different strategy in terms of risk to reward
Yeah.
for prop firms versus how you trade your personal capital.
In my personal account, I really let breathe. Like I'm very risk on it because it's my money. It's only me that's going to be upset with myself. I'm very risk on with it, and I'm more aggressive with those types of moves. And I take a lot of paper cuts getting in those trades. When I catch them, the paper cuts are all gone, and I catch like a huge winner. Again, if I'm trading in an expansive consolidating market, like where it retraces and then expands, retraces and expands, I normally just trade those retraces. So I'm just always predetermined point to get out of the market. I'm not expecting the market to just fall off the face of the earth. Yeah, so I always, to say that, I always have a planned exit and a planned entry from both sides of the market.
You want to touch a little bit on your strategy of going break even and scratching trades like that versus holding those trades?
Yeah, so I predominantly just try and get positioned in the 4 hour and hourly wick. They can obviously overlap a key market time being 10 a.m. most days. So most of my trades are trying to be positioned in the 4 hour wick, whether that's to the downside or to the upside. I'm not really that bothered. In a bullish market, you can imagine it's most likely to the upside because we expand on that hour. And then when we retrace, I want to grab that retrace into 50% of the move. And once we trade into like invert something in that wick, I'm looking to trade that in validation that the high of that wick for me is now the high of the 4 hour wick, and I want to trade that back to the close. When we get that shallow wick that you obviously speak about a lot, that strategy is a bit different because that I can't be positioned in a 40 tick move. I want to be positioned in an expansive candle that retraces back to the open, where if I have to trade a reversal and there's a small wick, I just trade a different model.
So, a few questions about sizing. I know you sized up pretty significantly, at least in January. You sized up quite a bit.
Yep.
Could you give some insight, maybe a few things that helped you size up, going from some smaller size, such as a few minis, to maybe 40, 100 minis that I've seen you trade?
Yeah. I think the reality is like no one goes from 2 minis to 100 minis. And if you do, you're silly because the risk there is 20 to like 40 times, right? It's silly. So, it's all about baby steps. If you're growing a drawdown, right? If I put money into an account, and this is not how obviously a lot of people look at it, but this is genuinely how I look at it. I size my personal account for heavy risk, so that if let's just say I deposit $50,000 into a personal account, I can risk $50,000 because that's my capped downside. The broker leverages my money. I'm good with that, so I can cap my downside to that. And once that grows, I can withdraw my initial. The money there is house money. I don't look at it as in like, oh, that's all my money now, because it is my money. But ultimately, I got my initial out, and I can now grow that into whatever I need that to be, and I can take riskier trades. Yeah. Like, and when I say riskier, I don't mean like trades aren't my model. I can take trades with much larger size, and I don't need to sweat about it because it's not my money in my head.
It's gone.
It's exactly worst case. We just reload it with the initial and run it back up. Luckily, I haven't needed to do that, and it's just the beauty of the game is that in January I had an amazing run. Took pretty much all the money off the table at the top of the market, and the market's been only down since. And I've been heavily risk off. Like when I say risk off again, I mean downsize from an account perspective, trading much smaller size, but the gains are still there. Yeah, because the volatility is crazy right now. I couldn't trade 100 minis in this market right now. Yeah. It'd be silly. Like we watched a video the other day, right, of me trading 40 minis just before the open one day. I traded a 50-point move. NQ moved 50 points in 5 minutes earlier. Yeah. Right now, yeah. The range is actually more. It's 200 points, and it's in 2 hours. It's 400 points.
So, what's your approach to risk management? Do you go in with the same dollar risk every time? Or if you're in a losing streak, do you size down? How do you approach all of that?
Again, these are different for different things. Like for prop, it's how do I make the drawdown work? and I need to make it work. Some people just see it as, oh, I've got 10 lives in an account. I don't need to worry. I can take 9 losers and YOLO it on the ninth. That's not the way I look at it. So I have like a scaling matrix from a prop firm perspective of I risk 1%. If I'm on a win streak, I risk more. If I'm on a losing streak, I risk less. But like I scale up and down with that. So if I get a winner, I go up. And if I get a loser, I go down. If I get another loser, I go down again. So it starts about 1, scales up 0.5% either side to a maximum 2, and scales down to 0.25.
So it's a bit more dynamic in the way that you want to minimize your losing streaks and maximize your winning streaks.
Because that's how that's all the success of an equity curve.
I know you have a pretty strong opinion on taking partials.
Yeah.
Took your first one yesterday.
I took my first one yesterday. Yeah, volatility. Look, I was expecting the market to really die off yesterday, and I couldn't guarantee that because it's going to be making new yearly lows, and that's just risky, right? So I want to just be off at the low, and I don't want to take it all off on the basis that we drop to my overall target, which is previous year low. So I factored in taking some off, but luckily for me, the market pushed through that level, and then just before the close, we got to close out pretty much the same area. So, but yeah, my view on partials is you're stealing money from your future self, right? Either you have conviction in a trading, you should get out at a certain low or a certain high, or you're gonna hope that it breaks through and hope that it does these things, and we start to speak about all emotions. And every time I spoke about emotions with my trading, I'm gambling, so I just can't logically put partials together with a constructive model that isn't, I can't associate to gambling. With that said, I do see logic in partialing off on swing trades and not round tripping a monstrous move when you're swinging. But intraday, for 99% of people, scaling out every 5 points or 15 points is silly, because either you know where you anticipate where that candle is going to trade into and you have a draw, or you don't. And if you don't, you partial off. I see these crazy videos on Twitter of someone buying a low and selling every candle on the way up. And it's like, you don't understand that if they held that low to that high, you make 5 times more money.
Yeah, so you're taking a 5-hour trade and making it a 1-hour trade.
1-hour trade, yeah. Yeah.
So are there any market conditions that you will just completely avoid? Not watch the market at all?
Not really. I don't really like trading Mondays and Fridays, but even then, recently I've found myself trading Mondays and Fridays with this big expansive moves because they happen on those days. I like consolidating expansive markets, and I know those two things don't make sense in the same sentence, but I like an expansive market that trades into 50% of the leg up.
So you like price when it retraces and then goes to expansion?
Yeah. I like that. What I don't like is I don't like range bound markets, because my model is completely unprofitable in those, because I'm buying the low, trying to sell 50% of the range up, down, and then we range here, and I'm buying the low, and then I'm anticipating some sort of breakout from a range before the range forms, and then I'm trading into that 50% mark, and then it trades into the top of the range, into the bottom of the range, and I get stopped break even. And those are the conditions. As soon as I identify that we're in that range, I either just trade the range if it's big enough, or I don't trade.
So what are a few things that you see in the charts that say, hey, we might be in a consolidation here? Is it just after a large range or pre-news?
Yeah, it's all market cycles, isn't it? So once you expand, you typically consolidate. And then once you consolidate, you typically retrace, and then you go to consolidate, and then you go back into expansion. I built a model around all of those market cycles in grabbing the expansion, not potentially grabbing the retrace, but you can, and then grabbing the expansion again.
And the way you trade is, even if you're wrong on your overall bias, you're just catching that retracement on a higher time frame.
Like, I could be like, oh, I'm expecting new weekly lows, but I will just grab that move from the top to the middle of the range, and if it picks back up, I don't care that I'm wrong on my bias. I just call that bit in the move, and I'm done.
So do you ever journal your trades or review trades? And if you do you find it more important to journal your winners or your losers?
Yeah, I don't journal my winners because I've done the reps with my model to understand that my winners are going to be winners, and I don't need to change those because they play out how I expect. and my losers are the parts of my model where I'm like, what could I have done differently here that would have allowed me to potentially either take a break even or not take a loser. Whether that's, oh, I got in on a lower time frame, and if I went up a time frame, I just basically bought the bottom of an expansive market or sold the bottom of an expansive market. And I constantly review that. I don't journal a whole bunch other than the losers, or if I have like an emotional trade, like if I feel very emotional about a trade, like I revenge traded or I got in for no reason other than gut feeling, then I'll just journal that. But yeah, I mean, look, if you'd have asked me this question 3-4 years ago, the answer is different. I journaled everything because I needed to find consistency in the reps and understand my edge. That was 100% of the reason. And if you're not journaling very early on in your journey, you're just cutting yourself off at the knees.
Probably the biggest question I have for this section is, do you believe in macros?
Oh yeah, no, I trade the 920 to 940 macro all the time. Yeah.
Oh,
The market, the market open. Yeah, I trade that one a lot. Yeah, no, I don't trade macros. No, they they don't exist.
All right. So let's get into.
It's funny because we talk about the New York market macro. You just pause to trade it. So yeah.
So a few psychology things. When it comes to mindset, what were the building blocks, the few key things that led to your long-term success as a trader?
You have to understand things in trading are just all probabilities, right? It's not, nothing's guaranteed to play out. Some guy could fat finger a million contracts tomorrow and send NQ 10% higher. It may retrace, but it will run absolutely everybody out in the process, right? So, there's no guarantees in trading. It's just stacking all the probabilities up in a model, in some sort of structured trading to say X amount of time this plays out, and you stack those probabilities in your favor. But the reality is like they don't always play out. They are going to fail sometimes, and you have to accept that. And lots of people just can't accept a loser. It's okay to lose. I had a losing day on Ninja Trader on Wednesday, but on Friday and on Monday, I had relatively good days, like big winning days. Yeah. It's like, okay, do I just judge myself based on my 6K loss on a Wednesday versus my 50K win over 2 days? No. Why would I do that? Because that's great RR if we just compare those two. So you do that, extrapolate it out over periods of time, and then just accept that you're going to lose sometimes. It's not always going to play out. It's not always going to look exactly how you want it to look. It's stacking those probabilities up, building that intuition over time, and letting it play out. Once you click the button, your job is over. Like the rest is up to the market, and you can't control that.
So what would you say to someone who just struggles with taking a loss? You know, they take a loss, they go on tilt or revenge trade. What would you say to that trader?
You definitely have to have a rule-based system for stepping away from the chart and accepting that your edge is not in play on that day. Right? So whether that's one trade, whether that's two trades, whether that's two losses, one win, I don't know. It's different for everybody, but it has to have some structure. But you also have to be able to just follow the structure. There's no point setting up structure in your trading to just ignore it when you go on tilt. Because it's just like, that's the number one thing. It's like, I know, we can sit here and tell everybody that what works, but it's like, if you don't do it, it's just not going to work. Like, if you only do it 50% of the time, those 50% of the times you don't are going to absolutely decay your account and ruin your P&L to the point that when it does work, you're like, oh, I'm not actually making good money at the moment. Well, because you're winning 40-50% of the time and you're making, let's say, 10%, 20%, but you're losing 5% on every single one of those days you go on tilt 50% of the time, which takes up 25% of your losses. It's about controlling your downside, playing defense, and just attacking when it makes sense.
And that has a lot to do with confidence, right? Because if you don't follow your rules, how are you going to be confident with your system?
Yeah. And that's the thing, it's like when my confidence is sky high, I'm just in the market so much because I'm just in tune with it. I'm in that flow, right? That flow state. And that's where I make most of my money. Like those times is just when my P&L curve just goes like this.
And then you're sizing more, as you said, with your dynamic risk strategy.
Yeah.
So backpacking off of that idea, what would you say is the biggest difference from someone in a break-even stage versus someone who's profitable?
Just like I've said this before, like you're stuck between that stage of you're not in the 99% of people that lose, but you're not in the 0.5% of people that win. You're in that 0.5 in the middle, but you're still better than the 90% of people that lose. So you're winning in my head. I think a lot of people think break even is bad. I think it's really good. I think it's okay to be a break even trader, like because that's your first job. Your first job is to become break even, then it's to refine and become profitable. It's that time. It's engaging in the right time, the right market conditions, accepting your probabilities, and over time, your model will go on losing streaks and go on winning streaks. And it's identifying those things and getting used to the market conditions and building that intuition up that allows you to size up when the market's there, size down when it's not, and really just curve that equity curve down and really ramp it when it goes up. It's all the difference. It's just all time market conditions and probabilities and accepting that over time you're going to become more weathered to all of them. And once you are, it's a recipe for success.
What would you say is the biggest difference between people that are not profitable versus those that are break even? Would you say that's just following your rules? I mean, that's what I see with most people is they either just go on tilt, revenge trade, don't follow their rules, and that's why they're unprofitable.
Yep.
Once they start following their rules, they become pretty break even, and that's when it comes into journaling and refining.
Yeah. I mean, look, we all get stopped out of a trade and immediately start framing another trade, right? We've all done that in our time. And if you don't say that, you're a liar, right? The reality is, it's like you have to become so weathered to be like, okay, my model's not there. See ya. And just go and do anything else. And, that's I guess the turning point is knowing, actually having the ability to do that over periods of time and do it consistently and really stop those silly losses trying to catch the tops or the bottoms, because that's where you just blow your account.
Removing the losses.
Of course, if you remove the losses and add winners, you can only win, right? So, but it's just minimizing your downside. Play defense. Don't be always on offense. Don't try and be in the market all the time. The market is always right, and you are always wrong until proven right.
So going off of that, what is the biggest losing streak that you have had?
6 losers, yeah, roughly. I mean, this is like, I'm saying that from someone that has a profitable model and can't remember going on tilt for 20 trades in a row, revenge trading, like. Yeah. I'm sure there are times when I've lost a lot of trades in a row, like, and have just blown through money like no one's business. Which I couldn't put a number on that. Like, actually going through a loss streak is like the last big loss streak I had was like I had like 2 weeks where it was just like back to back losers, like consistently losing. Like, I just almost didn't think my edge was there anymore. And then it's like, turn up to the markets on a Monday or a Tuesday, and suddenly your model's there. You click the button, it's like boom, straight away TP, and it's like the confidence just starts to come back.
So would you say the most important thing to do during that period is to just continue to execute as planned?
Yeah,
Have you ever dealt with any fear in trading? Fear of failure, fear of drawdown, fear of losing?
100%, because that's the name of the game. If you're not scared of the money, if you're not scared of losing money, you will lose a lot of money, right? And it's, well, on Twitter, like, so you mentioned it earlier. January I had a good run. I downsized. Why did I downsize? Because it got to a point where I was risking a house on a trade, and it's like, this is so much money, and one loss is just gonna tilt me. And it's just at that point I just accept that I just don't want to trade that size anymore. It's too long. I traded for too long over a consistent period. I knew that my model was due some losses. Stacking the loss, like knowing my intuition is like, oh, a loss is around the corner. I'm trading massive size. I don't want that loss. I don't want it, and I'm scared of it. I don't want it, so let's just downsize. Downsize. Pretty much like 2 weeks later, my model goes on like that 6 losing trade streak. So it's like minimizing that downside allows me to preserve my capital. When I want to step back into the market with size, it's all there, and I can go on that streak again, or I can go on that 6 losing streak again. But that'd be my choice, and I've curved the equity curve right now. So, yeah.
I guess we'll go ahead and end with this question. Do you have any psychological issues that you still deal with today?
Do I have any psychological issues today? I don't know. Some people will probably say yeah, but in trading, no. Like, and that's not like a cryptic way of saying like I'm depressed or something, because I'm really not. I've just really mastered my emotions when it comes to trading, and I don't you know, I could be up an extremely large amount on a position, and some people would stress about it, and I'm just like, it's okay. So it's whatever will happen will happen. Like, and that is 100% my edge. You know, like letting it play out over time, and I think I still like being right more than I'm wrong, and that's my ego, right? So it's always going to be in front of me, but I've learned to accept that the ego is the best and worst of me. And if I get rid of it, I get rid of the best versions of myself. But I really try and put the bad versions of me in the corner in a box, you know, and don't let them out that much, because I have the ability to revenge trade. I love being in the market at the wrong times sometimes, you know, and I've developed models and rules that keep that. Am I perfect on them? No. I don't profess to be perfect on them. Do I remain disciplined most of the time, like a good 90% of the time? Yeah. And again, that's my edge, right? I have a dopamine hit like anyone else. Like, I like getting dopamine hits. Do I get a dopamine hit from trading? Sure. Is that bad? Yes, but it's my job and I enjoy it. And I have to curve those urges to be in the market, or, oh, this is going without me. Just leave it. Just let it go. I have the ability to just get in those moves and get wrecked like everyone else. But I've been that guy and got wrecked like everyone else. And when I feel that way, I remind myself of all of those things. And I'm like, this is why we don't do it like that anymore. Because we would sit up till fucking 2 a.m. trading crypto on some random meme coin no one's ever heard of, on some exchange that no one's ever heard of, where I'm risking the GDP of a small country just to make my money back. It's degenerate. It's gambling. It's not fun. It's not fun in the hindsight. In the moment, I'm chasing that money back. I'm chasing that dopamine. I'm revenge trading. I'm doing all the things that I now don't do, and I remind myself of that. This stops me doing it. But look, I just always want to remind people I'm a human being. I have emotions. I mess up just like anybody else, but it's the messing up and the time and the repetitions and turning up to the market every day that has allowed me to develop the weathered emotions to the storm and understand that it's all probabilities, and understand that I could sit here and mark out a candle and say it's going to bounce there, like I did at the open yesterday. I want to see this high and I want to see this die. We didn't come back to that high all day. We took it and it's high of the day, high of the session. Okay, do I know that for a fact? No, because it could just blast through that, and I don't know. But like, the intuition in me and my model tells me that this is max pain. This is max pain. That should play out. Done. It played out. But on another day, it couldn't. And I accept that the probabilities there are all probabilities, and I don't actually have control. I can't force the market into a direction. I don't have unlimited amounts of money. And when you accept all of those things and accept that it's going to take time, and your job is just to be part of the marathon and not sprint to the finish line like every 19-year-old millionaire on the internet that's selling you a dream. It's a marathon. You're in this for the long haul, and if you're not going to make it. And that's it, really.
Thanks for coming on. We'll see each other in what, Greece?
Greece, yeah. Appreciate you, big dog.